Hey, this is Chris from StockSpot. Now in this video, I'm going to be talking about why it's not always better to own a home than to rent, and the circumstances where it may actually be better to rent than to own. Now, obviously in most parts of Australia over the last 10 years, owning a property has been a wonderful investment decision, and that's really been driven by two factors. One is that the property prices themselves have risen and risen quite fast over that period. Most places they've at least doubled over the 10 years. Some places a bit less, some a bit more, but doubling over 10 years is about average. But more importantly, over that period of time, interest rates have been very low. So any money that people have borrowed to buy those houses, they're borrowed at a low rate. And therefore, you're basically banking the difference between the rate that you borrowed the money at, which might have been on average 3 or 4% over that 10 years, and the house price growth, which might have been 8% per year. You're banking that 4% difference per year and on borrowed money. So there's a great multiplier effect, and it's really multiplied the wealth that people have had invested in property. But those factors may not always exist in the future, and that's really why buying may not always be the best decision. So in what circumstances may it not be the best? Well, really it comes down to those same factors. So in a world where interest rates are higher, and most importantly, interest rates are higher than the actual return of the asset themselves, then actually you're multiplying losses each year rather than gains. And the other factor to consider are what are the returns on alternative investments. So with that money that you could have put in property over the last 10 years, the Aussie share market at least hasn't performed that well. So it wouldn't have given you a fantastic return compared to property. But in a future period, it may be that shares or another asset would have done much better than property itself. And so really they're the three factors you have to consider when deciding whether to rent or buy. What is going to be the interest rate, what's going to be the return of the asset, and most importantly, the difference between those two, because you're going to bank the difference and it's going to really multiply out based on how much you've borrowed. But then what is the potential return in other investments out there? And I think those are the three key inputs into any decision around renting versus buying. Obviously, the only other input that's important that isn't a financial input is the security and those other feelings you get of owning your own property. Those ones are hard to really compute or calculate, but at least from a financial perspective, interest rates, the return of property, and the return of an alternative investments are the key things you need to consider.